Good morning and welcome everyone to NYSE TV Live. I'm Kristen Scholler coming to you from above the iconic trading floor of the New York Stock Exchange. And it's going to be a busy day. In just about a half hour, NYSE listed tech giant Oracle, based on the West Coast, is going to celebrate the opening bell here on the East Coast and open up trading for the week. So let's take a look at what's on tap. Well, a stronger than expected jobs report this past Friday. The Bureau of Labor Statistics reporting that the U.S. economy added an impressive 254,000 jobs compared to the 150,000 that economists had estimated. Now, that had investors feeling giddy, with the Dow and the S&P 500 each climbing about 1% in Friday's session. And we'll see if that optimism continues this week with fresh inflation data on tap. Meanwhile, my colleague Trinity Chavez is going to sit down with Dave Vellante, co-founder of SiliconANGLE and host of theCUBE, to look at the technology landscape when it comes to artificial intelligence, the cloud, and emerging technologies. And after the opening bell, Sonny Singh, Executive Vice President and General Manager of Oracle Financial Services, is going to join me to discuss some of his firm's biggest goals as the Oracle Financial Services Summit kicks off right here at the Stock Exchange. I mentioned it'll be a busy week on Wall Street, and that's because two inflation reports will hit as the Federal Reserve has just two remaining meetings before year end to look at that data and the jobs data that, of course, will determine the path forward for borrowing costs. Earnings season is also going to start this week, with Delta Airlines and JP Chase set to report third quarter results toward the end of the week. Well, after the Fed cut rates by half of a percentage point in mid-September, stocks have climbed higher. The S&P 500 is within striking distance of an all-time high, and in fact, it ended last week with its fourth straight week of gains. So with that, I want to bring in my first guest. He's going to walk us through the markets and whether or not this momentum can be sustained, what it means for IPOs too. Joining me now is Joe Zhao, Managing Partner at Millennial Capital. Joe, thank you so much for joining.
Thanks, Kristen. Good to see you.
Yeah, it's great to see you as well. And you're a perfect guest, especially today, because we're going to talk technology eventually, with Oracle celebrating the open. But on top of that, you actually were a part of the monetary policy team under the Fed in D.C. for a period of time. After this much better than expected jobs report on Friday, how does that impact the Fed's decision going forward?
Yeah, I think the short and sweet answer is it just increased the odds that they'll probably do 25 bips next meeting, because the interest rate doesn't need to go down that quickly. But to take a step back, the Fed doesn't like to make a decision on one data point. It's very prudent. It likes to make a decision over a period of data points, because it likes to be sure that it is onto something. So usually one data point doesn't swing the directions of policies either way. If this were to happen, if this data point were to take place over several data points, then I think you can make an argument that the direction of rates would differ. But this one data point doesn't really change the direction very much. But all things equal, what this data point also shows is the economy, the labor markets are more robust than people thought. Mm-hmm. That we're more likely to going to go into a soft landing, mm-hmm. and that the neutral interest rate, the one that keeps the Fed sort of in balance, is likely higher, mm-hmm. than 2%. Mm-hmm. So which means the Fed will need to cut from 5% to lower, but it doesn't need to adjust the rates that aggressively. So I think it just means, I don't think it means much, just one data point.
Yeah.
But if it means anything, it means that they're more likely to cut it by 25 bips next meeting.
It's interesting what this will mean for risk assets, right? The fact that interest rates are coming down, investors we know are always searching for yield, what it might mean for IPOs, but also money coming off the sidelines. With lower interest rates, how could investors and Americans see that funnel through into the markets?
Yeah, so the technical term is called the monetary policy transmission mechanism. That's a mouthful. What that really means is, as the central bank changes rates, it flows through the financial market, the banks, the asset management firms, and flows to the real economy, and that is a 6 to 12 month process. And so in 2021, the reverse happened, right? They raised rates, and then capital flowed to riskless assets like cash and treasury bonds, and now it's the reverse. So in the next 6 to 12 months, you're seeing more allocators like LPs and pension funds and family offices and endowments to rebudget their asset allocation probably next year in January, where they're planning, let's say in 2025, they're going to put more of their pie into risk risky assets. So these things don't change overnight. It takes 6 to 12 months. But all things equal, what this means is you're going to see more capital coming from the allocators back to the general partners at the PE hedge funds, VC funds. And so more capital is going to be allocated towards the risky assets. And then once the VC, the PE funds, the hedge funds, the tech funds receive more money, then it takes 6 to 12 months for them to deploy the money. So you're not going to see that immediate effect now, but it does take it is a 6 to 12 months process.
And we are definitely getting started on that process in the wake of this decision, Joe. I want to talk about earnings, of course. The third quarter reporting season set to kick off at the end of the week. JP Morgan starting and Delta Airlines, as is usually the case here. What are your expectations for third quarter earnings growth, knowing that GDP was up an impressive 3% last quarter?
Yeah, so not too different from the average street expectation. And the reason is the way to think about earnings growth rates and the GDP is the macro economy, and earnings are the growth rates of the biggest companies, of the 500 companies or 1,000 companies. Usually the companies outperform the real economy because the management at these companies are doing such a great job. They're some of the best people in business. But secondly, because they're always improving their margin profile, they're cutting costs, they're increasing revenue. So if all things equal, the GDP is growing a little bit faster than expected, you would expect earnings growth rates to also be pretty good. Now, we are at a part of the cycle where higher interest rates from the last 2 years is going to slow down the economy. So earnings growth rates will be slower than last year or 2 quarters ago, but they'll still be positive. If GDP is at 2 to 3%, I would expect earnings growth rates to be somewhere in the 45%. The actual margins is hard to argue, but with that backdrop, it's providing a really good background for equities.
So a pretty good background for equities. And Joe, everything that you've been saying, all the data points, all the Fed speak that we've been hearing, of course, points to that as well. But I do want to talk about the potential for an October surprise, right?
Yeah.
October can be a volatile month.
Right.
Certainly, we see that there are high tensions in the Middle East.
Yeah.
And so I'm curious what investors might to expect on that front.
Yeah, so when I think about October surprise, there's really two components. There's the political surprises, which I don't think anyone could really predict, and there's the financial market surprises. And so I, as an investor, I don't really expect any surprise unless there's a surprise. But having said that, having watched the markets over several presidential cycles now, the markets tend to be muted in either direction in the month leading up to the elections. And that's because the bigger allocators are just sitting on the sidelines watching kind of the results of the election and sort of which direction the country goes for the next 4 years. So I don't expect to see the markets acting too wildly on either direction for the next 4 weeks. But then all things equal, if let's say the elections pan out to be the way expected, you usually see the markets kind of rallying in November. That's because then you remove one piece of uncertainty, you sort of know which way that the country is going, and then the markets will kind of tend to rally a little bit more in November.
Is your firm, Millennial Capital, predicting a certain outcome in DC?
That's not what I do. I hope for what's best for the country and what's best for our people, but I think that the one thing that I'm really looking forward to is just, I think beyond the elections is sort of how, what we focus on. The AI, the tech investments are really just adding a lot of fuel to the economy.
And we're going to talk much more about those technology, AI investments, as well as what we might expect from the general IPO market. Joe, after that opening bell, you're going to join me from the floor of the stock exchange. Oracle again set to ring the opening bell, and the stock exchange welcoming Oracle here ahead of the NYSE Tech Summit that kicks off this evening. So we'll have plenty to talk about throughout this show. Well, Oracle is in the process of making its way to the trading floor, of course, ahead of that opening bell in just about 20 minutes' time. And after this break, we're going to dive deeper into the technology space. Stay with us.
You're here today. You are marking 75 years as an organization. Congratulations, that's quite a milestone.
Thank you.
And as part of that, you launched your Manpower campaign. Tell me about that campaign.
It's a really exciting campaign for us. We have a brand that's been in the market for 75 years. And the campaign, Human Power, really emphasizes the centricity of the human within the future of work. We read a lot about the things that are happening with Gen AI, or whether it's driverless cars and all kinds of technological transformation. But we continue to be, and have always been, firm believers that the human is at the center of the evolution of the future work. We believe it's essentially the workers of the future that determine the future work. And that's why we wanted to put the human inside our great branding campaign, and also responding to this notion of candidates and job seekers and employees really having a powerful position with the trends that are changing the labor markets all over the world.
Now tell me, how has the company evolved to meet the needs of clients and candidates around the world?
Well, as you can imagine, it's been a long journey over 75 years in over 70 countries for our company in terms of the services and products that we deliver. But it's really been an evolution over time, and think about this as the impact of demographic changes, industrialization, technology, globalization. Our business has evolved with all of those changes, not only here in the US and North America, in Europe, in Latin America, and in Asia. So we've essentially become a much more global organization, a much more diversified in terms of our service offerings and the skills that we provide to our clients and our candidates, the opportunities that they can look for work.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio above the trading floor. And ahead of that opening bell with Oracle set to celebrate it, we want to take a deeper dive into the company's impressive rise in the cloud space. And with that, I do want to bring in my colleague, Trinity Chavez, with more. Trinity, it's good to see you.
It's good to see you too, as always, Kristen. Now, to talk more about the key moves that powered Oracle's ascent, how it's managing to compete with such larger cloud providers, and its unique positioning in the market, I am joined now by Dave Vellante. He is the co-founder of SiliconANGLE and host of theCUBE. Good morning, Dave.
Hey, Trinity, good to see you. Thanks
it's
for
always
having me.
great to see you. Thank you for joining us on the show this morning. Now, let's talk about why you are here. You're actually having an event here. You're working with the Oracle team. Talk to me more about it.
Yeah, as you know, John Furrier and I are building out our presence here at the NYSE. Sonny Singh from Oracle, he runs the financial services business for Oracle, is ringing the bell today. We're going to have him on later today, and we're running in partnership with the NYSE Wired, our collaboration there. We're running a CXO series. X stands for CIO, CISO, CEO, CFOs. We got all the CXOs coming on, and we're going to unpack what's happening in the technology and finance markets.
And you know, Oracle has recently emerged as a major cloud player in this space. Talk to me more about this. What do you think sets it apart from other key players that are currently out there on the market from your vantage point?
You know, I think anytime when you talk about Oracle, Trinity, you got to start at the top with Larry Ellison. So he's like the alpha of Silicon Valley.
Yeah.
And so it starts from his ethos, which is very much focused on technology and R&D. Now, back in the early 2000s or 2010s, he made some controversial statements about cloud. Many in the audience might remember. He said, oh, it's no big deal. It's just servers and databases and storage up on the internet. And people interpreted that as he was poo-pooing cloud. And then they started to invest in cloud. Their first version, like many first versions, really weren't that good. But over time, they've gotten better and better and better. And so what Oracle has done is they've essentially differentiated by becoming what I call the database cloud. So they have the best database, the most mission critical database, and then they've built out from there. They're investing heavily in CapEx, in GPUs, they've got really strong networking, and they've got relationships now with all what used to be considered their competitors, the big three US hyperscalers, AWS, Google, and Microsoft, where they're running Oracle databases inside of those three hyperscale clouds.
Yeah, you know, this is a company that was founded back in 1977. In fact, it was the original company to commercialize structured query language, as you said, SQL. So talk to me more about this shift, especially as the technology landscape, the AI landscape has constantly shifted and evolved over time, especially with the implementation of AI and how it's really impacting the cloud space. So what would you say is the key niche for Oracle, and how it's going to continue to remain innovative and ahead of the curve amid such strong competition that's out there?
So I would say their niche is pretty big. I mean, they're a $50 billion plus company. They've got almost a $500 billion market cap now. And so they made an acquisition quite some time ago, probably 15, 16 years ago, of Sun Microsystems, which was a hardware company. Oracle's a software company. And what that did for them is it allowed them to essentially be the iPhone of the enterprise, where they've integrated hardware and software running together. And so as a result, their database and their software runs faster than anything else. So their big differentiator is that integrated hardware and software, a very strong mission critical database, and then up the stack, they've made tons of acquisitions over the years for application companies, and they've done the hard work, it's called Oracle Fusion, of fusing all those applications together. So in the context of AI, we always say you can't have AI without data.
Yeah.
Well, your data has to be consistent, it has to be harmonized. So I'll give you an example. What's revenue? Well, revenue, it could be bookings, it could be ARR, it could be NRR. So by fusing together all those different applications, all the data and the metadata and the business logic that's inside those applications, Oracle can actually serve up better data for the agents, that's the new buzzword, the agentic AI, for agents acting as humans to act on that data and take actions on behalf of the organization.
What do you think is in store for Oracle? Where do you see the trajectory of their business model going over the next 3 to 5 years?
I mean, remarkably, it's accelerating, Trinity. I mean, they just upped their CAGR forecast to the mid to high teens. For a $53-55 billion company, that's really quite incredible. And so I see them as the cross-cloud play because of their database expertise, and I think they're going to continue to, their AI strategy is somewhat different. Rather than charging for AI, they're bundling AI, as are many companies, into their infrastructure, into their database, into their applications. They've got an autonomous database, so their strategy is really to drive that automation, drive labor costs out, and compete on the basis of their mission critical database.
What are some other big trends you're seeing right now when it comes to the cloud space?
Yeah, so I think AI is obviously the #1 trend. Everybody's spending like crazy on GPUs, as you know. It's benefiting NVIDIA in a big way. People are waiting for, okay, when's the ROI going to come?
Exactly.
The top line macro, if you look at IT spending, is not growing that much. It's maybe growing at 3.5%. About 45% of customers tell us they're stealing from other budgets to fund their Gen AI. And so I think what I see in the future is that's got to pay back. It's got to be self-funding, or else we're going to come into what Gartner calls the trough of disillusionment. Many people would say that we're there today. But it's got to throw off cash to be self-funding, and I think it will happen. I think it's going to take some time for this agent-based vision to take hold because our data is so discombobulated right now.
Now, briefly, we have about 30 seconds left, Dave. Talk to me about what our viewers can expect to see on SiliconANGLE's theCUBE.
Well, so as I say, Trinity, we've got the CXO series, we've got CISOs, we have chief investment officers, we have CEOs of startups, we've got, as I say, Sonny Singh and Oracle. We're going to go deep into what's happening in financial services. 2 days of wall-to-wall coverage that we'll be releasing over the next couple of weeks.
And where can we watch this?
So go to thecube.net and go to siliconangle.com for all the news.
Always a pleasure, Dave.
Thanks, Trinity.
Thank you. I'm going to send things back over to my colleague, Kristen Scholler, in the other studio. Kristen?
Trinity, thanks so much. Great to get Dave's take there. And of course, all coming ahead of Oracle, this morning's bell ringer, making its way to the podium and transferring its listing here to the stock exchange back in 2013. Well, at the time, it was the biggest ever U.S. market transfer. And while the company is well known across the tech space for its cloud applications and cloud infrastructure, its financial services business is also making plenty of noise. That's our focus today. Oracle Financial Services monitors financial crime, processes financial transactions, manages billed sales, and processes health claims. Oracle says it serves over 430,000 customers across its platforms, with the financial services division primarily helping companies in the banking and insurance sectors, several of whom are actually part of our NYSE listed community. Notable financial services customers include these companies listed at the stock exchange: Deutsche Bank, Houlihan Lokey, HSBC, and Santander, key financial institutions. Well, Oracle is hosting its Financial Services Summit here at the Stock Exchange today. And as part of this all-day event, Oracle is going to be welcoming some of the biggest private and public banks to review what is to come for 2025, all ahead of bank earnings kicking off at the end of the week. Well, stay with us because after the break, we're going to spotlight another company that's recently transferred here to the stock exchange and how it's helping companies across the technology sector.
Now, I want to start off by talking about the company. Tell me about NYSE and your mission.
Absolutely. NYSE is a healthcare marketplace platform that helps connect healthcare managers who have short-term shift needs, openings, with qualified nurses who can fill those needs. Sounds simple because it is. But historically, that hasn't always been the case. Historically, the model has looked a lot like an adult game of telephone. So a manager who has a need and a nurse that wants to fill that need are separated by a number of parties. As a platform, we compress all of those layers, that adult game of telephone, into a digital switchboard where we directly connect the nurse to the manager and create better working relationships.
Now, talk to me about how you're different from other companies in the healthcare staffing space.
Yeah, you bet. We get a chance as a team to talk to nurses and managers every day, and what we find is that we are differentiated in three key aspects. The first of those, NYSE is intended to make better transparent connections. As such, when a nurse goes to work to fill a shift need for a manager, if both parties are excited by that when they end, we allow them to freely connect and work together in a full-time capacity. That's different than industry, which will generally charge a really bulky hire away fee or a direct to hire fee. What that enables us to do is give both parties the privilege of being able to test drive a relationship before they make it firm. Great patient care is facilitated by great teams, and great teams are built on trust. And in that sense, NYSE helps to facilitate and accelerate the speed of trust that those teams get built in the name of patient care.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. And last month, Kforce celebrated its transfer to the stock exchange by ringing the opening bell. The company is a solutions firm specializing in technology and other professional staffing services. Says it provides career opportunities for about 20,000 professionals each year. Well, our Judy Shaw sat down with the company's chief executive, Joe Liberatore, to talk more. Take a look.
We're really a professional services organization, so we predominantly deal with employment, everything from direct hire to contract work, which we call staff augmentation, then to manage teams and solutions. So the really higher end, bringing in project teams to handle whole initiatives. And about 94% of our business is technology specific.
So tell me, what trends are you seeing in technology investments across your diverse client portfolio?
That's a great question. I mean, so much going on in and around data, cloud, as everybody starts to build out the platforms that are necessary to support AI. You know, AI, everybody heard about it when ChatGPT hit about 1.5 years ago and thought it was going to turn the world on its head. But what people didn't stop to consider is there's a lot of foundation work that has to be done. You know, organizing your data, investing in your data. So we have disciplines that focus on data, focus on cloud, focus on digital transformation, which are all paramount to ultimately be able to maximize AI.
Now, Kforce prides itself on its world-class recruiting skills. Tell me more about that and how you are expanding that capability.
Recruiting has always been core to our business because at the end of the day, it takes people to be successful. Whether you're working on a project team or whether you're bringing somebody in as a full-time employee, it's all about people. So yes, recruiting is one of our core competencies. And so we've made a lot of investments in technology. In fact, that's where we first started leveraging AI and a lot of things from machine learning was on our recruiting front to really drive a lot of efficiencies for our people so that our people could focus on those things that people do best and let technology provide leverage in other areas.
Now, Kforce has unique insight into market demand for highly skilled tech workers, as you've said. What does this knowledge tell you about the direction of the economy and challenges facing companies in the latter half of this year?
Cycles typically on the employment front, they go through 4 phases. When things first start to soften, organizations typically exit contract or staff augmentation labor. Then the second phase, they start to right-size their full-time employees. This is when you hear about layoffs and things of that nature. The third phase is when they start to bring contract labor back when it hasn't really stabilized. And then once it stabilizes, then they start to bring in full-time employment. What we've been seeing these last 2 or 3 quarters is we've seen a lot of stabilization. So it would kind of drop you into that third segment where stabilization before growth takes place. And I'm only speaking technology specific because that's where my area of expertise is.
And finally, Joe, as you look to the end of 2024 and the beginning of 2025, what are your top priorities?
So we're replacing a legacy system that's been in place for 20 years, and that's really going to drive a lot of efficiencies for our people and improve our client experience and our consultant experience. And then we're working on what we call our integrated strategy, which is how do we bring all of our services in a seamless manner to our end customers and leverage the power of Kforce. We've been in business over 60 years, so the relationships that we have and our people have, we want to make sure that we're tapping those relationships to be able to bring everything and all the power of Kforce to those individuals.
Well, when it comes to people finding work, as we mentioned earlier in the show, the U.S. Bureau of Labor Statistics reported on Friday that the economy added an impressive 254,000 jobs last month. Well, another encouraging sign from the BLS report is that average hourly wages rose by 0.4% on the month, and they were up 4% from the same time a year ago. Now, Oracle is getting ready to ring the opening bell, and we will take you live to that opening bell down on the floor of the stock exchange after this short break.
Cloud security company DAS recently launched the company's new product, the DAS Unified Remediation Platform. And we have the co-founder and CEO here to talk all about it on this episode of Taking Stock.
Just recently, we've announced the Unified Remediation Platform, which actually takes, the remediation approach from total complete visibility to code, cloud, infrastructure, and application, but then not only having the visibility, but also actioning it and helping with the remediation, which is today really one of the most important things. It's not just to have the visibility, it's also to fix the issues. And if you think about the recent SEC rules and, following the SolarWinds case, now what we see is that organization needs to take more responsibility about understanding the business risk, but also help fix and show that you have the right remediation process for that.
Can you elaborate more on the scope of this platform?
When we started DAS, and I think a year back when we just met, we were actually nominated as one of the 10 most innovative companies at RSA Sandbox. Yes. And then we were really focused on code to cloud, cloud to code remediation, which was really big and very innovative approach. Since then, we now deploy with tens of Fortune 500 companies and big technology companies that they have complex environment. Cloud and code is not enough. You need to actually focus on remediation and visibility across code, cloud, infrastructure, and application, which means the entire technology stack, right? So this is really big because it takes us, the ability to be the single pane of glass for organizations, which could be like, financial banks, could be like healthcare companies, big tech companies, that they actually.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler down here on the floor of the stock exchange. We are awaiting the opening bell. Oracle's Sonny Singh is going to be up there on the podium to celebrate. We're going to speak to Sonny after the break. Trinity, quite some action down here, of course, as stocks look to open about fractionally lower, but coming off of 4 straight weeks of gains and the S&P near a record high.
Absolutely. I mean, there's been a lot of news making headlines that's really moving the market, and so we are on high alert here at the New York Stock Exchange, and of course we're going to get those details of play-by-play when we go down to the trading floor in just a little bit, just straight after the opening bell. And Kristen, you're going to be speaking with Sonny after the opening bell as well.
That's right, Trinity. I'm excited for Sonny to join. The company has 2 press releases out this morning about what specifically they are doing in the financial services industry, Oracle, when it comes to that cloud infrastructure and really utilizing AI to hone into those capabilities and expand their offerings to fight things like financial crime and, of course, to help with basic things like credit scores. So we'll be taking a live look, of course, at the opening bell here momentarily. But Trinity, I thought your guest earlier was great. Great to get Dave's insight too.
No, it was great. I mean, all things cybersecurity, AI, technology, that's moving this sector forward when it comes to cloud. But you know what? Let's tune into that opening bell, and I'll see you on the floor.
We're down here on the floor of the stock exchange, and I do want to bring in my guest. He joined me earlier with a specific expertise in the technology and AI space. Joe Zhao, of course, of Millennial Capital, joins me here on the floor of the stock exchange. Joe, stocks opening fractionally lower, but I know you were telling us earlier you're still very positive on the markets. What do you make of this open?
Yeah, look, usually in October, markets don't move too much on either direction because the big allocators are watching the direction of the election. So post-elections, usually you see more of a sigh of relief and markets start going in either direction. So I expect October to be much more muted. But if you take a step back and look at the fundamentals, we have a positive GDP, positive earnings growth rates, lowering interest rates and expanding multiples. So that sets up the financial markets for equity markets for a really good rebound.
You follow the technology space very closely, of course, invest in companies that have a hand in cloud and artificial intelligence. What is Oracle doing right in this space?
Yeah, for context, we're a venture capital firm based in New York. We're investors in many of these pre-IPO stage tech companies like Lambda, Anthropic, Cohere, Stability, and et cetera, et cetera. And Oracle is one of the big cloud players along with AWS, Azure, Microsoft, Google, and DigitalOcean and the likes. And so when you look at AI, there's really two pieces of AI. There's the applications, there's the foundations. In the foundations, there's three pieces. There's cloud, there's data, and there's large language models. So when you think about the cloud, there's the big three, Oracle, and some of the smaller players like DigitalOcean. So Oracle is a provider of cloud service, of GPU services and CPU services for technology companies to build their AI applications on. And so Oracle works with AI companies like Cohere to provide AI application software, AI programming software, and AI cloud services in a bundle, so that if I'm an entrepreneur, let's say I'm building a healthcare app to detect cancer using data, right? Well, I need to train the data on a model, and so all that is being done on Oracle servers with Cohere, for example. And the like, Anthropic works with Amazon, Oracle works with Cohere, and OpenAI works with Microsoft. So this is sort of the landscape of the AI market, if you will.
And for our viewers, Joe, Cohere is a private company that you invested in, right?
Correct.
So talk to me a bit about some of the companies that you've invested in from a technology standpoint in this space that have made their way to the public markets. Some, in fact, actually listed here at the stock exchange.
Yeah, so in the last cycle, I was very fortunate to have invested in a few companies that have gone public on the NYSE, for example, DigitalOcean, Palantir. And so I think, when you think back at the last cycle going to 2021, this cycle from 2023 to probably for the next 5 to 10 years, what are the most relevant qualifications for a pre-IPO company to really do well? Well, I think you got to come with the same package as before, which is revenue, margins, earnings growth, path to profitability. But I think what's more in this cycle is, as a company, you have to really convince the street that, hey, we are relevant in the age of AI. Because AI is just like the internet 30 years ago. You have to have a plan to incorporate AI or be compatible with it. And so my suggestion to the CFOs who are prepping for IPOs is to obviously prep your numbers, prep your story, but also prep an appendix on, hey, here's how our business model is going to evolve with AI, and here's how we're going to be competitive and relevant, so that we don't become obsolete in 10 years.
Sonny Singh, who heads up the financial services division within Oracle, he's an executive vice president, is going to join me momentarily, Joe, after he comes down from that bell podium to celebrate the open here. Are there specific questions that you have for him as to how the company is utilizing AI and the cloud when it comes to the financial services industry?
Yeah, look, I think the biggest question is, when do we see the ROI? And I think that's one of the kind of the negative voices in the market is we're making all these investments in chips and data, right? When are we going to get that actual ROI measured in earnings, customers? I'm already seeing that in sort of across our portfolio and in the companies that I track. But I think the question really is, how do you convince your customers that, hey, AI is really making a big difference? My own take is these investment cycles take years to play out, because you make an investment now to reap the rewards economically, financially, in terms of profits over years. So my suggestion is to, my own opinion is to be patient and really believe in the story, and to really let it play out, and not to make a judgment on quarterly earnings to make a conclusion on that stock.
Joe, you've been such a great guest. We had to get you back for a second round here today, of course, because of your take on the overall markets and specifically this technology space and artificial intelligence. That's Joe Zhao with Millennial Capital. Joe, thank you. All right, well, elsewhere, one platform making big moves in the rebate management space is something that we're focused on. And Trinity Chavez spoke to one company about how it is looking to reshape the way that manufacturers, distributors, and retailers are driving growth and boosting earnings. Take a look.
So Enable is a software development company, and we provide software that manages B2B rebates for manufacturers, distributors, and retailers.
Now, how does the shift in rebates from business costs to growth drivers impact supply chain partners?
So rebates used to just be seen as a cost, an entitlement almost, that distributors would earn at the end of the year, and it was almost just taken for granted. But they've now become much more of a business driver because they're much more targeted and dynamic, and they're paid when certain outcomes are achieved. So that's been a huge shift.
Tell me about the specific challenges that Enable's platform help address.
Rebates are very complex because there are many different types of products and different categories and different units of measure. So trying to keep track of all of that across the supply chain is very, very hard. And we have a modern cloud platform that allows both sides of the trading relationship to see the rebates and talk the same language.
So you basically enhance transparency, essentially.
Yeah, we're building a lot of transparency and trust in the supply chain.
Now, with Series D oversubscription and extension, what sort of growth do you foresee for Enable?
Sure, so we're growing geographically. We started originally in the UK and we've grown massively in the US, Canada, Australia, but we're going into Europe and many more geographies. So that's one part of it. Then the other part is really adding product capabilities so we can drive even more impact for our customers.
How does adapting a single source of truth, how has that improved collaboration when it comes to your partnerships?
Previously, if you imagine, a manufacturer would have its view of the rebates internally and the distributor would have its view, and they were actually different and not joined up. So this single view of the truth means that both parties can get on the same page and drive business outcomes by talking the same language.
Tell me how Enable plays a pivotal role in helping businesses grow.
Rebates are a bit like pay for performance. So what happens is the manufacturer will say, we want to hit certain goals, might be value, volume, product mix, and only when those goals are achieved are the rebates then paid. So it really incentivizes distributors to hit those targets and therefore growing revenue for the manufacturer and profit margin for the distributor.
And tell me, what are some of your biggest goals for 2024?
We're continuing to grow in triple digits, so continuing to grow headcount, revenue, customer numbers, and delivering a lot more return on investment for our customers.
All right, well, to talk about the latest from Andrew Trinity Chavez, my colleague joins me now here on the floor of the stock exchange. And Trinity, I know this is a storyline that you've been following. Do we have any updates in the space?
Yeah, you know, I actually spoke with the CEO and the company representatives just last week, and they were telling me that they are having significant growth and they are on target to hit all of their milestones this year and start off the rest of the year of 2025 very, very strongly. They also said that customers are reporting an increase of growth of 40% rebate revenue year over year and cutting payment timelines from 12 weeks to just 4 weeks, which is really, really significant, especially when it comes to the rebate management space. So I'm excited to continue to talk to the company and see their continued success.
Do we know what else is on the docket for this industry and this company specifically?
You know what? They were very quiet when it came to, you know, what's up next. But you know what? When they have major announcements, they're going to join us on NYSE TV Live to continue updating us along with our viewers. But we have a lot of exciting things happening here at the New York Stock Exchange. And so there's many different events on the docket, including your event tomorrow, which you're going to be emceeing the Tech Summit, which is kicking off tomorrow. Can you talk to us about that?
Yes, so Oracle, of course, celebrating the opening bell. Sonny Singh is going to join me momentarily. Great way to start the week because technology, we know, is so much in focus. It's where investors are looking for growth these days. And that technology summit here at the Stock Exchange will bring together some of the best and brightest minds to talk about in these exclusive private discussions where we go from here, both from a cyber perspective and from an artificial intelligence perspective, really on the enterprise business level. And so I know you're going to be holding down the fort on NYSE TV Live and covering it all as well.
Yeah, we're going to be having 2 shows tomorrow. And like you said, I'll be covering it from studio here, but I'm looking forward to having the discussion with you come Wednesday to talk about the recap of everything that you covered at the Tech Summit. We're also going to be speaking to Bonnie Hayun as well as Chuck Atkins, who are going to be a vital part of this Tech Summit. And, you know, this is the place where a lot of industry leaders at the forefront of conversations when it comes to AI technology are going to be talking about the rapid developments, and it's all taking place here at the New York Stock Exchange. And, you know, I think that Sonny is probably on his way down from that Bell podium, speaking of, after opening up the U.S. equity markets. What do you think you're going to discuss with him?
Yeah, there's a lot to cover, especially how this company is utilizing AI to fight financial crime, among other things. Of course, the company out with a press release this morning. We'll dive into that. And ROI, return on investment, so important. Trinity, we'll catch up with you in just a bit. Thank you, Trinity Chavez. And stay with us. We'll have more after this short break.
So, Daphne, most people aren't familiar with uveitis or uveitic glaucoma. Tell me more about this medical condition and why finding a treatment has become your life mission.
Well, thank you for this question. Uveitis is a chronic, recurrent autoimmune disease of the eye. Like in any other autoimmune disease, the immune system is a little bit too strong and it's causing inflammation in a healthy organ. In uveitis, the healthy organ is the eye. With recurrent inflammation in the eye, the tissue is being distracted that leads to vision loss and blindness. And indeed, 2/3 of patients will end up with vision loss and 22% with blindness. Now, despite those devastating outcomes, and we are speaking about young patient population, the only available treatment for uveitis in the past 70 years are topical steroids that creating glaucoma complications that further lead to blindness. Now, you ask why this is what I'm doing. I was diagnosed with uveitis as a very young kid at the age of 8. And by now I lost my vision on my left eye and I'm struggling to maintain my right eye vision. At one point in my career as venture capitalist serving on a board of cutting-edge technologies in medical devices that brought life-changing technologies into patients, I realized that I cannot stay blind, if I may, to my kind, to patients with uveitis, and I decided that I will take this as my life mission.
So now, tell me, Daphne, what's unique about your innovation?
Our innovation is very interesting. It is practically inspired.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler down here on the floor of the Stock Exchange, and joining me now is the man of the hour, Sonny Singh. Is Executive Vice President and General Manager of Oracle Financial Services. Sonny, it's such an honor to be speaking with you after celebrating the opening bell today and kicking off what's going to be a busy week of technology events. What is this opening bell celebration about to you?
Thank you, Kristen. It's great being here. Ringing the bell at the New York Stock Exchange is always an exhilarating event. Today, we are essentially celebrating our thousands of customers in the banking and financial services industry, and we're also delighted to have them with us today. We were really proud to actually invite some of our key customers like Navy Federal Credit Union, Guardian Life, TD Bank, Citizen Bank, and others to the podium with us. So a great day to start the week, a great way to start this week.
Absolutely. The Stock Exchange has our Tech Summit tomorrow, so this is a great way to kick things off when we talk about AI, cybersecurity, and of course the cloud. Walk me through, Sonny, how your clients, some of these biggest financial institutions, are utilizing your services.
Excellent. Well, when you really think about it, financial institutions and particularly banks are essentially technology companies. They are very adept in leveraging technology to run their business. And we actually play a big part in enabling them to utilize some of the greatest transformational technologies like AI, and also helping them to move to the cloud. I believe that these banks are definitely going to move increasingly to the cloud because it's becoming an imperative to provide next generation customer experiences, making sure that we bring them the right service at the right time, the right product at the right time, and essentially start to leverage AI technologies to combat things like financial crime and the increasing cybersecurity threats. So this is now a key part of our charter, is to help these banks leverage our technologies in accomplishing these goals. I'm also excited to announce that today we were recognized by Chartis AI 50 report. We were ranked #1 amongst 50 different industry players, and this was in recognition for our ability to bring innovative solutions all the way from infrastructure to applications to our customers. And so very excited about that recognition, and timing couldn't have been better.
I want to talk more about those solutions, the tools, the current capabilities, and how you are helping companies beyond fighting financial crime.
Okay, sure. I mean, I think AI is very, very pervasive. It doesn't matter what part of the technology spectrum you're talking about. So if you really think about it, if you're trying to deliver a next generation customer experience to you and I as consumers, making sure that we have exactly the service that we need at the time that we need it, AI can definitely facilitate that. AI can also help banks comply with things like regulatory requirements. I'll give you a very quick example. Debt collection is one of the things that's heavily regulated, and we are able to use AI solutions, particularly generative AI, to actually monitor collection calls so that the tone and the sentiment of those calls are actually compliant with the laws. And we can provide feedback not only to the debt collector but to supervisors. Now, this would be something that would take a lot of time, effort, and money, but with AI and the tools that we've built using generative AI, we are providing these capabilities out of the box to our customers.
What is the return on investment, or ROI, as our financial folks know who are watching, that you're expecting with this technology?
Well, I mean, these technologies are being adopted as we speak, so we have a lot of analyst information on this. It's predicted that just the front office could improve productivity by about 35% over the next 2 years. That could result potentially in $3 to $4 million per employee in increased revenues. So those ROIs are pretty aggressive.
Sonny Singh, such an honor and a pleasure to get your perspective, of course, after celebrating the opening bell, a big day for Oracle, and we look forward to you welcoming other industry leaders throughout the day. Of course, Sonny Singh is the General Manager and Executive Vice President of the Financial Services Division of Oracle. Well, the New York Stock Exchange has been around for more than 232 years. And so it's no surprise that it would have a storied history when it comes to the bond market. We have a story for you on that very piece when we come back.
Tell me about what key features and user experiences can people expect when navigating Revify.com?
So Revify's data operations cloud, it helps the data teams stay on top of, for example, their planned budget. Like with Revify, like we have had cases where customers, they don't run out of their Snowflake budget or BigQuery spend in like 9 months or so, right? It keeps them on track. Second thing is, it really watches out for the team's time. And this is very critical because when you have data, the adoption is built on trust. And we have good quality data flowing through, then trust builds and you make better decisions. And with Revify, we have had customers who have had almost like 0 escalations from their data teams to their businesses over the past 1 year.
Tell me about a success story where a company used Revify and it was extremely beneficial to their bottom line.
So this is a public company, $10 billion one, and within 3 weeks of using Revify, they're on BigQuery. What they noticed was a huge spike in failed jobs, which means some teams were not getting the right data as well. And the natural instinct is, get more capacity. Go back to CFO, get more dollars. Here we said, just take a look. Are those, what is causing it? And within seconds, they were able to narrow it down to a user and certain query patterns, which were taking about half of their organization's capacity. If they had followed the usual route, they would have asked for more money, unhappy CFO, unhappy businesses. Here, what happened is next day, those were all gone. In fact, what it did was it actually released almost $250,000 worth of capacity for them. The overall impact, think of it, $500,000. And the right way of building your data organization.
And how does the intelligence layer rapidly detect and resolve critical data issues, enhancing overall performance?
We actually believe very strongly that the time of the data teams is super precious. And everything we do has to operate at very low TCO, like total cost of ownership for our customers. So what is underneath powering all of this?
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here underneath the Bell podium where the action has been unfolding as we start the week and the trading session together. And we do see stocks down fractionally, but truly nothing to be concerned about. Many of the market's guests and experts that I've spoken to over the past several days on NYSE TV Live still think the bias is very much to the upside over time in stocks because interest rates are coming down, and of course that should bode well for the IPO market. Well, our parent company, Intercontinental Exchange, through its ownership of the stock exchange, has a connection to bonds that goes back more than 230 years. Its coverage comes from two sides, pricing data and analytics through ICE Data Services that supports more than 13 million financial instruments, and ICE bonds, which offer deep liquidity pools that support multiple trading protocols and solutions for professionals in the market. Well, these innovations didn't just happen overnight. The NYSE's curator of archives, Anna Mello, shows us the rich history of the bond market and its current role in the global economy. Take a look.
If not for the sale of municipal bonds, the New York Stock Exchange would not exist. By 1790, the United States had incurred $80 million in debt. Alexander Hamilton, first Secretary of the Treasury, was called upon to draw up a report on the health of American economics, the result of which was the passing of the Funding Act of 1790. This act nationalized and consolidated the debt held by the states, only recently the 13 colonies, to be sold off in the form of American Treasury bonds. This is bond certificate number 3113, issued by the Treasury of the United States and dating from October 20th, 1791. It was purchased by Jacob Faitama of Amsterdam for $12,519.30 and pays an interest rate of 3% per year. Naturally, they were sold in a location that had been a marketplace since the days of Dutch New Amsterdam, the corner of Wall Street and Broad Street. This open-air bond resale marketplace was lively but unregulated and therefore easily manipulated. Two speculative brokers, McComb and Dewar, nearly succeeded in cornering the bond market. However, they defaulted on their debts in 1792, which caused America's first financial crisis, the Panic of 1792, as well as the collapse of the bond resale marketplace. From the ruins of this collapsed marketplace, 24 brokers assembled beneath the shade of the famous buttonwood tree growing on Wall Street and penned the Buttonwood Agreement. Signed May 17, 1792, the Buttonwood Agreement is the New York Stock Exchange's founding document and lays out the rules for the development of a safe, organized, and trustworthy marketplace. 232 years later, we uphold those same principles. Since our origins trading American Treasury bonds, the exchange has continued to list and trade municipal bonds over the years, issued by cities, states, and the federal government. Listing your bond on the New York Stock Exchange ensured that it would get more visibility and gave municipalities access to capital that they would not have been able to raise otherwise. Here are some examples. This clipping shows an announcement in October 1869 by the Secretary of the New York Stock Exchange Committee on Securities, detailing which North Carolina state bonds were good delivery. These bonds were issued by the state of North Carolina on behalf of several railroad companies. Governments issuing bonds on behalf of companies that could improve their state infrastructure was common practice at the time. This clipping shows an announcement in July 1873 by the chairman of the New York Stock Exchange Committee on Securities that states Missouri Sixes, or university bonds, are to be added to the list, the sale of which benefited the state university. University of Missouri was the first public university west of the Mississippi, and they continue to educate pupils today. Liberty and other war bonds. Financing a war effort is no small feat. In April 1917, the United States entered the war on the side of the Allies and immediately needed to raise money. The New York Stock Exchange supported the war effort by sponsoring bond buying drives and rallies for the war bonds known as Liberty Bonds, right on our iconic trading floor. This photograph illustrates one such drive, during which the New York Stock Exchange's famous Big Board acted as a makeshift billboard, encouraging members and employees to buy Liberty Bonds. The New York Stock Exchange also endorsed the purchase of war bonds after the United States entered World War II in 1941. Along with listing the bonds of municipalities around the United States, the New York Stock Exchange has also listed bonds issued by countries around the world. Foreign governments list their bonds on the New York Stock Exchange to leverage the status of the exchange as a nexus of global capital markets, raising capital for their own projects. Governments such as Portugal, Japan, and Austria have listed their bonds on the New York Stock Exchange, just to name a few. Here are some more examples. From the government of Jamaica, this is a 6 3/4%, $7.5 million external sinking fund loan bond issued by the government of Jamaica in 1981. From the Republic of the Philippines, this is a 6.5% 15-year external loan bond issued by the Republic of the Philippines in 1965. The Russian Imperial Bond. In 1902, the New York Stock Exchange listed a $1 billion Imperial Russian bond. That translates to about $27 billion today. As a thank you to the New York Stock Exchange for floating his bond, Tsar Nicholas II of the Romanov dynasty commissioned the House of Fabergé to make a gift. This Fabergé urn arrived in New York in 1904 and has been standing watch in our boardroom ever since. The New York Stock Exchange began as a marketplace for federal and municipal bonds, which the exchange continues to offer today. Bonds traded on the exchange have raised capital to aid in the construction of schools, hospitals, railroads, and other vital infrastructure for over 200 years. We believe municipal bonds represent investing in the most important capital any government holds, its people.
We follow bonds a lot here at the Stock Exchange. We also follow stocks, Trinity, and stocks kind of taking a slow start to start the week, but still near record highs. And it's going to be an eventful week, to say the least, here at the Stock Exchange. I'll be emceeing the Tech Summit tomorrow, and I know you'll be covering that as well with a key guest on tap.
Yes, I will. I'll be speaking with Bonnie Hayoun, and I think you're going to also be talking to Chuck Atkins on Wednesday. But that's just one of the many events that take place here at the New York Stock Exchange. For those of you who might not know, we have over 3,000 events that take place here at the NYSE every single year, where our team is working tirelessly to make sure everything is executed to perfection. We also have the Space Summit that's coming up at the end of October, along with Money 2020, which you and I will be doing dual coverage.
That's
I'll
right.
be on the ground in Las Vegas, and you'll be
right.
here holding things down at the exchange.
And what can we expect from the Space Summit before we get to Money 2020?
So the Space Summit, it is where some of the biggest and most influential leaders in the space sector are coming together, collaborating, having discussions about not only like cybersecurity, which is at the forefront of so many conversations around the world when it comes to space, but also how you can combine capital with space.
Yes.
And there's just a lot of interesting conversations that are around this sector, and I'm looking forward to spearheading it with all of our team here at the exchange.
So much happening in the space investment, so I'm looking forward to that as well.
Yep.
That's going to do it for today's coverage of NYSE TV Live. Thanks for watching. I'm Kristen Scholler.
And I'm Trinity Chavez.
In life, I'm reminded that it's not about the destination, it is truly about the journey.
My pleasure to greet you today from the center of the U.S. capital markets here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic about what lies ahead. It has been a privilege